Hello and welcome to another Major Market Movements End of the Week Market Review for May 29th, 2015. I'm Quad G, and in this video we're taking a look at the FX markets, some of the equity markets, energy markets, and the 10-year note, and there was something else in there too, but I think that pretty much covers it. All right, so we're starting off here with the dollar. Actually, let's go to these charts first. Right here, US dollar. Okay, so US dollar, I think it's working on completing a 5-wave move to the upside. I think we could still see one more move higher, an incremental high. Could fill in some of this manic drop right here. We filled in some of it already, but there's a little bit more that we could fill up in this previous congestion area. I think we'll fill that up and then we'll have a chance of a reversal, and I'll show you more on that in a bit and why I think that. The QG3 is still in a bullish alignment, though the last couple days we've closed right at the 3 EMA, letting us know that we've backed off the impulsive trend to the upside and we've moved into a correction. The weekly closes higher. Little intra-week move up, but right back down, about retracing about 50% of this week's move higher. This is still bullish, but corrective by the week's end. And EWO, previously, we show the standalone move to the downside here, and I don't see any real positive divergence to the top side yet. This last swing high here is right about here, and the price has come up, but it has not exceeded this last swing high in the oscillator. So we don't have a positive divergence set up yet on the top side. So I think we're still have some bearish potential. There certainly was not a positive divergence off the last low. So there's still room for that with another move to the downside in the price. The RSI here, we've popped back up. We can see that we're just about toying with the 60 level here, and but we haven't got a solid rejection yet. The MACD is open to the upside on the daily, and on the weekly we're still open to the downside. So mixed picture there, and I would say categorize the USD as we're in a short-term corrective period at the moment. I think there's at least the potential of at least one more move higher, maybe an incremental high above 97.70-ish, and then a very good chance for a negative divergence on the top side. This current uptrend, which I'll show you here in the other charts in a moment. All right, let's take a look at the euro. All right, so the euro, a couple days ago, saw this hammer candle, got some follow through yesterday and even a little bit today. I do think there's a chance we could get a turnaround here. I especially like how the, let me double back here. I want to take a look at the Dow for a moment. Oh, not the Dow, excuse me, dollar. Okay, I want to point out here, see this week here? It's not an inverted hammer candle. It's just a positive candle to the upside, all right? But if we go to the euro, we've got a much different picture on the weekly. The weekly shows us a bullish hammer candle on the weekly close. And the reason I point this out is there's some interest into why I treat the different FX markets differently since they're all tied to, or a pair off of the dollar, why doesn't the dollar more or less direct the movements or the trading opportunities in the other pairs that are associated with the dollar? And this is precisely why. It's because the movements in the dollar are not going to automatically translate into the exact same movements in the pairs, whether it's the euro or the Aussie dollar or what have you. Those are fiat currencies in and of themselves that have their own dynamic as to why they are fluctuating as they are against the dollar. So I think it's best to, when you're looking at these markets, these FX markets that are associated with the dollar, that you look at them standalone. You look at them not considering what's going on with the dollar so much, but looking solely at the technical movements that are taking place within the pair itself, and then making determinations off of that as to what you should be doing in the market. So I like what's going on here. I think the turnaround has started. It's got a long ways to go still. You can see that the QG3 still in a bearish alignment to the downside, though contracted somewhat, and we're getting a second daily close above the 3 EMA, so that's telling us we're in a corrective mode right at this time. And the EWO, we much like the dollar, we don't have a negative divergence on the top side yet, so there's still plenty of room for another shot up to work on that, if not blow it out of the water altogether with a 3 of 3 move to the upside, which I don't think would have very much trouble with coming all the way back up here to this congestion area. You can see we got a manic drop there back there in December that never got back tested. So this could be a cleanup move, come all the way back up here, clean up that little bit of garbage in the market behavior. There's a little bit here too, another little manic drop, never got back tested. So that's what I'm leaning towards, is another very sharp move higher. You can see that the price has come down, hit the 40 level, and now we're starting to bounce up, so that's really good behavior for the midterm as far as the bulls are concerned. MACD on the weekly is open to the upside. That's bullish, but the daily is still open to the downside, though the histogram bars are shrinking a bit, which means the signal line's kind of curling over towards the upside. So overall, I think there's a really good chance that the euro has bottomed here, and we could see continued follow through to the upside, especially off of this weekly hammer candle. Let's look at the pound. All right, so no bottoming signal yet, at least on the daily. No hammer candle or what have you. The QG3 has moved into a bearish alignment to the downside. The weekly closes lower, so that's bearish. The EWO really well, we do have a negative divergence there on the bottom side. Not on the top side, but the bottom side for sure. As you can see right here. You can see right here we've got currently the price is higher than this last swing low, but if you compare it in the EWO here, we've got a lower low in the EWO compared to the last swing high here, or last swing low. So that's a negative divergence on the bottom side, which opens up the potential for, if we push higher and create a new incremental high here in the price coming up, it could generate a negative divergence on the top side. The RSI, we've come down here, we're still in this 40-60 window here, so it's neutral on the daily. MACD on the weekly is still open to the upside. On the daily, however, we're still open to the downside. So overall mixed picture for the pound. I do think we have the chance of a turnaround here, which I'll show you in a minute in the LA wave charts. But it's going to have to happen immediately, like early next week, to see that come to fruition. All right, let's look at the USD JPY. All right, so USD JPY, we're struggling with what I think is a top here, and I think this market is definitely overheated. Back out here. I do think we've got a wave 1, 2, 3, 4, 5 leading diagonal to the downside. This has been a corrective move up. It may or may not have finished today. You can see here in the QD3, a couple days ago, we saw this move up. This is one of the things that caught my eye, made me think that maybe we're potentially having a top coming into place here soon. Is you can see with such a huge violation above the upper Bollinger Band in that blue line, it caused the 3 EMA in the red, which is the red line here, to close above the upper Bollinger Band, which this is a signal to me that this market is getting way overheated to the upside, and a corrective move is very likely to take hold. And so the next day we did get another shot up higher, but it quickly reversed, creating this inverted hammer candle. And then so far today, today's move has just been an inside positive move, where it looks like we're closing back underneath the upper Bollinger Band. So again, we're seeing the heat taking out of this market, though I would say we're not getting a real solid reversal just yet. We might have to wait into next week. The week does close significantly higher. Again, just a massive weekly move, similar in scale to this move. This would probably be the last weekly move that was that extreme, out of the top of what was already a strong move to the upside. So another indication of the manic, what do I call this? The mania, if you will, in the market is showing itself here, is what I'm trying to get at. EWO, back up here in the daily, you can see we're still well underneath the this last swing high here. We've kind of trumped this one here, but we're still well underneath this one. So there's still the potential of a negative divergence developing here in this market on the daily time scale. The RSI, no negative divergence has been set up yet. There on the daily, though in the smaller time frames, I'll show you that it is starting to build. Actually, I think I can just show you here. Let's go to 2 hour. You can see here in the 2 hour time scale that we got a higher high here, and then at this swing, then we got a push down, another push higher into what looked like an expanding ending diagonal, which created a negative divergence here in the 2 hour. And now we're not quite. One more push down, lower low here in the price. I think you're going to find that the RSI is going to move below the last swing low compared to this last swing low here, way down here at 120, and that would set up a negative divergence on the bottom side as well. Weekly, the MACD is still slightly open to the downside, but closed off somewhat. And on the daily, we're still way open to the upside. So overall picture, I think there's a good chance that USD JPY may be topping out here. It's certainly looking overheated and at least due for a short-term pullback, if not the completion of a major run, which I'll have to show you in the other charts, which is next. Let me pull those up. Looking back here at the dollar, here's the LE wave count, the midterm. Got the 1, the 2, black. We got a subwave 1 here. We got an ABC expanded flat taking shape, and I'm thinking this market wants to again fill in this manic area, kind of backtest this whole congestion area right in here. About the middle of it is very common, and once that's complete, then I think we'll complete wave C of 2, and my expectation is we'll see another impulsive drop to the downside that should be able to come all the way down here to 93. In at least as much time as this leg built up, we should see a quick move down. If on the contrary, we see some choppy sideways movement that takes as much time or longer than it took for this leg to move up, then that tells me that this may not be subwave 2. This could be a new impulse, and we're just seeing a wave 2 correction for another move higher. So attitude is everything, as I like to say, and if this attitude to the downside is impulsive and quick, then that's going to just confirm that this is a secondary wave 2, and we are working on wave 3 of 3 to the downside. Here again, it looks like we've got wave 1, wave 2, wave 3 finished. Wave 4 may have completed this week, and my expectation is we'll see at least one more incremental high for wave 5 of C, fill in this manic move, and be done with it and start to see a drop. Okay, here's the 4-hour time scale, and you can see that with this little move to the downside, which is wave 4, you can already see that we develop a negative divergence here in the price compared to this last swing low. So that tells me that the next move higher in the price may see a higher high in the price, but less likely that we'll see a higher high in the oscillator, creating a negative divergence on the top side, which would help confirm that this is just a 5-wave move, and once it completes, we'll see a nice strong move down. Let's go to the euro. The euro here got the wave 1, 2, 3, 4, and 5 finished. Looks like a wave A, a B for an expanded flat. ABC down. Looks like it's finished, and now we're starting to creep higher. Here's the midterm count on the euro here. Large wave 1, large 2, sub 1, sub 2 looks complete. And so my expectation is if wave 2 is finished, we're going to see a very strong move to the upside, stronger than this leg, and should be able to challenge at least the 1.18, the 1800 handle, if you will, at the 38.2% Fibbo level for the long-term retrace of this move to the downside. So that's a bare minimum. It certainly could go much, much higher than that. Oh, stop it. All right, let's look at the Great British Pound. All right, so here's the pound. Oh, things are slowing down for me. Come on now. I'm getting bogged down for whatever reason. It's not moving. All right. Well, we'll do the best we can with it. Wave 1, wave 2, I think it's best to count this as sub 1, working on sub 2, and it may be darn near complete here. It looks like a double zigzag to me with an A, B, C down, an X wave, and now A, B, and now working on C. which may have completed with a 1, 2, 3, 4, 5 wave move down. And we've tested the 70.6% Fibo. So all is in place for a potential bounce to the upside here, but so far the weekly close just isn't showing it just yet. But if we come up here and take out the last little swing low or swing high at 53.40, then I think that'll be our first good indication that we may have bottomed here and we're starting a wave 3 of 3 to the upside. Now, looking at USD JPY, this is our impulsive move to the upside out of the previous triangle. Here's wave E of that triangle. D and E finished. 1, 2, 3, 4, 5 looks finished for the thrust. And now we're working on a reversal. Now again, it took several days to build this to the upside. It should take as long or less long than it took for this leg to develop to come all the way back down to where it originated from, all the way down here to the 119 level, upper 118s. All right, so that's it for the FX. Let's put that away and move to the other peripheral markets. All right, so here's crude oil moving along as expected. Wave 1, Wave 2, Wave 3 looks finished. Wave 4 alternates with the sharp, which is alternates with the Wave 2 flat, and now working on Wave 5 to the upside, which I think should be able to come up here and test the long-term 38.2% Fibo at about 67, or maybe even slightly lower than that. Let's see what the market gives us, but for now, this is looking like very strong reversal behavior, and we're on our way up. And we zoom in here on this wave 3, wave 4 again, everything moving along just as expected. We're actually getting a rule of 4 breakout here to the upside as we got tested that blue trend line there. 1, 2, 3, and now a fourth breakout. Looks really solid. This impulse isn't finished yet. It looks like a wave 1, a wave 2 pullback this morning, and then a wave 3 up. And we may chop sideways a little bit for a wave 4, and then one more push higher for a wave 5 to finish a subwave 1. Then we might get a subwave 2 pullback, which could backtest that blue trend line. And then once that's complete, we get a third wave up of 5 to the upside on our way up to that 67 level. All right, so here's natural gas. I think it's still working on this right shoulder here. You can see that the left shoulder depth was about $2.50, the mid 50s there, mid 250s. So I think it's possible we could come down at least to that extent, maybe to that 78.8%, 78.6% Fibo at $2 and $2.58. We could test that, fill in that manic jump that we saw previously, and then we'll be looking for a potential turnaround to start our way back up out of this inverted head and shoulders pattern. Tripping the neckline should send it up. I think it'd easily go up to $4.40. This last swing high here, roughly, maybe even $4.50, something like that. So we'll be watching for signs of bottoming action here, and then we'll get in long, try to catch that ride to the upside. IWM, Russell 2000, again, no real serious movements one way or the other. And some more kind of sideways chop here. So very boring to watch at this point in time. But I think there's a good chance next week, maybe by the end of next week, we could see the end of this corrective period and maybe the start of another move to the downside. Which reminds me, I've got to go back here and take a look at the Dow on the Dow chart here. There's more information there to look at. There's a question about the Nikkei, and this is, though I hate to do it, I'm back to borrowing this wave 1 back here, which I think is less than ideal, but after considering everything, really this is the best looking count I can come up with, as sorry as that is. But it does work. We've got a wave 2 flat, definitely a flat there. Wave 4 sharp, definitely looking sharp there. So now we're waiting on wave 5 to the upside to complete. It may have a little bit more to go. So we look at this next slide. I'm seeing currently from that wave 4 bottom, 1, 2, 3, 4, 5, 6, 7, 8. It looks like to complete this impulse, we need one more wave higher for 9 waves. Impulses always end on 5 waves, 9 waves, or 13 waves, and we've definitely have more than 5 waves, so we need at least one more move up, I think, to complete this pattern. Then it'd be a good time to be watching for a reversal. So we've got 1, 2, 3, 4, 5 to the downside for wave 1. Been working on this corrective move for a while now. It does look like a double zigzag, a sharp correction. So I think we can get rid of the idea that of a flat correction. I don't think that's going to pan out. Instead, we've worked on the sharp correction, and we're working on the second zigzag to the upside, which may or may not be finished yet. So we'll be watching for potential reversals here. Let's see if we can go to a daily. Zoom in here. Come on. So you see the day closes higher, but if, say, Monday or Tuesday, we see an inverted hammer candle or an OKR, outside Q reversal, something like that, then that'll be our first clue, I think, that wave C of 2 is finished and we're going to start our wave 3 of 3 to the downside. Okay, let's go take a look at that Dow. Let's get rid of this. All right, so the Dow, we're very close. This is a breakdown point here at 17,925. We're still above that. So I have to lean towards the potential of at least one more move higher next week while above that level. Though if we break below that, I think that's just going to encourage further downside, especially a break of this trend line right here, which is currently below at next week. We're going to be, that trend line is going to be below there at about 17,843. Definitely, if we break that, then I think this uptrend is done, and we'll see some more selling. Let me back out here. No, that's not true. Okay. Really not much to see there. The weekly, Last week, we did get the inverted hammer candle. We're starting to see some follow through to the downside this week. This move engulfed the last two positive candles. So this is another one of those situations where, the Fed and its cohorts are looking at the situation, and I bet you they're contemplating doing something about it. And of course, the bears taking a look at this scenario or short, and so the Feds may want to try and run them out again and try to push it up higher. I'd want to see again some more evidence of selling and some more potential evidence that the Fed is not going to try and rescue this market at this point in time, but it's going to let it go. We got an incremental high here, which does set up the negative divergence here on the, I think I showed you this last week. Actually, it's a double negative divergence there on the EWO, so that's certainly bearish. Same thing with the RSI, double negative divergence. We got, from this last swing high here, we've got two more highs, new all-time highs, but both those highs are lower highs in the oscillator for setting up the double negative, which is bearish. And the Dow is open to the downside on the daily MACD, and on the weekly, looks like we just ticked back over to the downside there as well on this weekly close. So that's bearish. So the Dow, from a technical point of view, certainly looking bearish. But again, don't be surprised to see some intervention here. If I would say that intervention is not going to show up if we start to see a move that starts to push and violate the lower Bollinger Band there, and definitely comes down here to test the 200 DMA, this red line here at 17,539. I think that would be our first clues that maybe the powers that be are going to let it go and finally correct. Okay, I think that's it for our coverage for this week. Hope you all enjoyed it, and we'll be seeing you next week. Adios.